Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate paperwork so you don't have to. Today we are looking at FreezeTag Inc. and their latest quarterly report. It seems like this company might be playing a real life game of tag with its finances, and honestly it might be its Satan. Before we dive in, if you are interested in finding out more about what's really going on in these reports, join our Discord channel. The link is in the description. This report paints a picture of a company struggling to stay afloat, declining revenue, significant debt, and warnings about its ability to continue operations all raise serious questions. Is this the end game for FreezeTag, or can they find a way to level up? FreezeTag Inc. just submitted their Form 10Q, which is basically their quarterly report card, to the Securities and Exchange Commission. It covers how they did in the first 3 months of 2025. This form tells the SEC and anyone else who is interested about the company's performance and financial health. FreezeTag is a company that makes mobile location-based games. These are games you play on your phone that use your location in the real world. They also provide technology to businesses that want to use mobile gaming for marketing. Let's get into the numbers. Remember, these are unordered, so they might change a little later on. First, let's look at their assets. Those are the things they own. Cash is down from about $216,000 at the end of last year to about $95,000 now, which is money owed to them is also down slightly as well as prepaid expenses and other current assets. Altogether, their total current assets decreased pretty significantly from about $55,000 to about $13 to about $34,000. They do have some capitalized software, which is software they developed. These are worth about $314,000. All of that adds up to total assets of about $450,000. At the end of last year, this number was closer to $600,000, so that's quite a drop. That looks like they have lost about 25% of their assets in about 3 months. Looking at the other side of the balance sheet, FreezeTag also has liabilities, which is money they owe. To suppliers is up a little. Accrued expenses, which are expenses they know they have to pay, is also up slightly. They also have notes payable, which are loans that they owe to related parties like their executives. Those are at about $379,000. Taking all of that into account, their total current liabilities, what is due within the year, are over $1 million, significantly more than the current assets of $134,000 we mentioned earlier. Sonnet of the current portion are another $150,000, bringing the total liabilities to over $1.2 million. All of this means is that they have a big working capital deficit and have a lot of debt due very soon compared to what they have on hand. Looking at the stockholders' deficit, what remains after all the assets are used to pay debts, we see over $10 million in accumulated deficit. Altogether, the total stockholders' deficit is around $793,000. FreezeTag took in about $395,000 in revenue this quarter. However, their operating costs and expenses were over $500,000. That's a loss from operations of over $100,000. After accounting for other expenses like interest, their net loss for the quarter is about $116,000. That's a big difference from a company that is supposed to be successful and viable. Comparing it to last year, you can see that the net loss has decreased about $100,000 from $218,098, which is definitely an improvement from last year. Next, let's look at the cash flow statement, which shows how much cash the company is actually generating or losing. So in the first 3 months of 2025, FreezeTag used almost $72,000 in operating activities. They didn't have any cash flow from investing activities, specifically repaying loans. Overall, their cash decreased by more than $121,000 this quarter. That leaves them with a little over $95,000 in cash at the end of March. Given their losses and debt, that cash balance isn't a lot to work with. The statement of stockholders' equity shows how the ownership of the company has changed. In this case, not a lot has changed. Series B and C preferred stock remain the same. The common stock shares issued remains the same. Now let's dive into the important details that FreezeTag is sharing about the state of the company. In this section, they admit there's substantial doubt about whether they can continue as a going concern. That is something you never want to read. This is a very serious warning and a red flag to investors. It means the company might not be able to stay in business. They lay out all the reasons they've been losing money using cash and have Shortage of funds to pay bills, it's not a pretty picture. Management is saying they will try to cut costs and increase revenue, but there's no guarantee. They may need to find other sources of funding. The company says that there have been no recent accounting pronouncements that would have any sort of material impact on their finances. The debt is not very big, with it sitting at just under $600,000, but the ability to pay it back is questionable. We can see that related parties such as the CEO are due a big amount, as well as other loans with high repayment rates of 17% due April 2026. We also see in their maturities of long-term debt that in the coming 12 months they owe $443,464. Their common stock authorized is sitting at $800 million. With 75 million shares issued and outstanding, Series B and C preferred stock remain the same. The preferred stock gives specific rights to some investors, so it is worth paying attention to. Freeze Tag's option plan allows them to issue stock options to employees, which can motivate them but also dilute the value of existing shares. It looks like about 7 million shares or so have been issued under these plans. Here's where it gets even more interesting. Management is exploring all kinds of options for the business, including selling it off or finding another business to merge with. This suggests they know they can't keep going as they are. So what's the bottom line here? Freeze Tag is in a tough spot. Their financial situation is precarious and they are openly considering drastic measures like selling the company. Looking at these results, Freeze Tag appears to be struggling significantly, while their management is trying to stay optimistic and improve the financial situation. The numbers speak for themselves. I would say the strengths they might have lies in their existing technology and games, and maybe they can partner with the right company. Weaknesses are definitely their high debt, their very low cash, and the going concern uncertainty. There's a significant risk they won't be able to continue as a standalone business. The opportunity is probably them getting acquired or restructuring and finding new sources of revenue. It is hard to give an exact number of what the company is worth, but it is hard to imagine it being a big number. Alright, that's our breakdown of Freeze Tag's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.